Hey, family, welcome. This is Mind Your Business, and I'm excited to be here another Thursday. Thursdays excite me, I guess you can tell. Thursdays really excite me. I'm so honored to bring Mind Your Business to you. This all started as a vision. This all started as a dream just to be able to highlight the successes of our minority communities. And so that's what we do on Mind Your Business. It's very simple. Nothing deep here. We just highlight the achievements and successes in the minority communities. And I love the fact that we have so much talent in our community. Oftentimes, that talent is overlooked because we're looking for some grand thing. We're looking for people outside of our scope, outside of our communities, until we forget that we got so many gifted people in our communities and so many great business owners. And let me tell you something, in the African American community, especially, I know what it's like because we tend to dog out, us because our practices or maybe it's something we don't like. But man, it's some good people in our communities. We are some good people, and they're serving well and they're doing great things. And I want to say thank you to every one of you, both past and present and future guests that will be on Mind Your Business. This show could not do it though without great people like you. That's you, right? You, our listening audience, those who are faithful every Thursday night. You jumped on this thing. You did. You jumped on it. You're faithful to it. We often ask you to think about sowing to it only because we like to bless people on Mind Your Business. I don't just want us to be a show. I want us to empower people, help somebody, right? So we always try to bless people. So we always show you our cash app when we first come on. We don't talk about a whole lot. Thank you for sowing. This is our cash app, right? And if you want to be a blessing to Mind Your Business, just shoot something on that cash app and say, hey, I just want the show to go on. I do, because we're looking for great sponsors. We are. We're broadening our business now, and we're looking for sponsors and people who have businesses or whatever practice that you have. We'll talk about you during the course of our show. We'll promote your business during the course of our show, and I promise you, you'll get a lot of advertisement, and you will get listen and way more than what you can pay for or what you would pay for on Mind Your Business. But if you want to be a sponsor of this show to get your business highlighted every week, talked about every week, then make sure you see us in the comment section, and we'll one of our staff members will get back in touch with you. Tonight is a great night, y'all. Listen, we've seen a lot. We've seen the debates. We talk about it. You've seen the debates. We watched two. We watched the presidential debate, and we watched our vice president's debate. And I'm impressed with our vice president. The vice president debate. I like Kamala Harris. She's intelligent. She's poised. She's particular, and she certainly her speech is very clear, and she points to that which she's trying to express, and she expresses that. She don't back down. Just because she's a female and she's in the presence of a male, she does not back down, and I love that about her. She was great last night on that debate. She really was. I want to ask you to share Mind Your Business. We got, I think next week we're giving away a weekend, not a weekend, but a night of a weekend, at least one night in the Grand Bohemian in Mountain Brook, and also an opportunity to eat at Attorney Courtney French's restaurant, Solo Luna. I hope I'm saying it right. I mess it up every time, but it is in Mountain Brook. It's a fine restaurant that he has, and you will be granted that as a couple, because we want married couples just to unite with one another and love one another. So share this tonight. Share it, 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 share it some more until you get on somebody's nerves and they be like, hey, stop sharing that show with me. I don't want to watch it. And then share it again. You know why? Because this is great stuff. And what we try to do on Mind Your Business, we try to bring people to you that you need. We do. We try to bring community people who are succeeding that you really need, and information that you can use in your everyday lives. A lot of times, y'all, we just have the lack of knowledge. We didn't have the information. I don't assume that people just do things intently. I would prefer to think that perhaps we make moves in life, and sometimes the wrong ones, because of what we did not know. The purpose of Mind Your Business is to bring you knowledge, to bring you wisdom, to give you hope through the knowledge that you learn on Mind Your Business. And so all of our special guests are busy people, but they take time out to come on this show for a few minutes to share with you who are listening to us. They take time out of their schedule to share with you important things. And so tonight is no different. Tonight, We have a very special guest on Mind Your Business tonight. I'm impressed with his resume, his work ethics, his field of work, which is a financial professional. Now, let me tell you something. Every one of us, need to look back in retrospect over our own finances and see where we are, because time will slip up on you. Before you know it, you're saying, "No, I'm 50 years old, I'm 40 years old, and I got to retire, and I have not done anything toward retirement." Or, man, my baby will be 18 in a few years, and I have not saved a dime toward my baby's college. What am I supposed to do? I ain't making a lot of money. I don't have a lot of money. How am I supposed to save money? The pandemic got me. Well, this financial professional tonight is going to help you, and he's going to also show you how you can take a little, right, and still save. How you can master your money, right? Don't let it master you. Mastering your money and making wise decisions with what you have. I know sometimes we always are asking for more, but you got to stop and ask yourself, what am I doing with less? Let me say it again to you. A lot of times we always ask for more, right? But you got to stop and ask yourself, what am I doing with the less that I have, right? So this guy's here tonight. But I want to tell you, before we move on, I'm going to call him on in 1 second. I need y'all to get a couple in your mind, a married couple, married for this purpose, married couple who been fighting together, been loving each other for a while, or just got married, don't matter. And you said, I would love for them to spend the night at the Grand Bohemian. I would love for this couple. I need you to tag them and get them on the show first, but tag them tonight. And it could be your pastor and his wife. It could be your supervisor and a husband. It doesn't matter. It could be your sister and a husband. It could be your brother and his wife. It doesn't matter. But tag that couple tonight. And just tell us, hey, I want them to spend that night at the Grand Bohemian. I do. I want them to get that free dinner, and I want them to have that special night at the Grand Bohemian just so they can rekindle. They've been through life together. They've struggled together. They fought together. They love one another, and they could use the break, right? They could use the night away. And so the Grand Bohemian is a very nice outfit. I'm telling you, it's a nice hotel. And so I want you to tag them, somebody you love, and say, hey, that's the one I want to spend the night at the Grand Bohemian together so they can enjoy one another. Hey, it's going to be on Mind Your Business along with attorney Courtney French. We partnered together to make this happen. And I'm telling you, it's going to be a great night for somebody. I believe it. And I want y'all to have it. I want y'all to listen. If I wasn't hosting the show, I'd put me and my wife on it. I would, because I say, hey, I want us to win. So, all right, so somebody said LaPrady and Daryl Jones would love this, and I'm sure they would. So we're going to pick these names next week from these comments. We're going to put all these names in this drawing, and we're just going to pick us a winner, and somebody's going to be blessed, all right? So make sure y'all are tagging people tonight as we get started. I want to bring on our special guest tonight, Mr. Uriah Williams. Mr. Uriah D. Williams, that is. Let's bring him on tonight. Uriah, what's up, man?
This evening.
I'm good, man. Now I got your volume. Good. I'm well. How are you?
I'm doing fantastic.
Man, good, man. Hey, listen, I love the look too, man. I mean, it's fly. I love it. Are those what are they called? Twist locks?
It's just hair. I grew up out my head this way. This is what it looks like when a pandemic happens. So.
I love it, man. Well, listen, it's cool. I've been thinking about giving me some twist locks and stuff. Like, I get some hair first, but after it grows, I was thinking about giving some twist locks.
Hey, in this day and age, they just like the women can buy the hair, men can buy hair now too. So just keep that in mind.
Okay, well, I mean, I guess I can give me some sew-ins, I guess. Hey, my motto is if you can't grow it, sow it. I mean,
There you go.
Hey, I'm with that. Man, listen, what an impressive resume you have and the things that you do and the mind that God gave you. One of the things I love about life is I appreciate diversity. That everybody can't do everything, but God got somebody who can do something, everything, man. And your field is financing. I want to ask you a few things because, man, many people struggle with this area. I mean, marriages break up because of it. Families fight over it. people they chase after it all their lives, and they have a hard time saving. What is it about this finance that we can't seem to conquer?
Well, when many of the situations that you were just talking about is pride. Everyone is raised much differently. Our Caucasian brothers and sisters who I work with versus our minority cultures, our cultures of brown and black people. We all approach money differently. We were all taught differently, and that has a lot to do with how once those situations arise, how we actually react to it. Do we fight through it? Do we figure out a way to compromise, or do we just say, "I'm gonna do what I want to do. You do you."
That's true. True. So let's talk about the approach, right? Because I mean, since we're talking about we approach finances differently, I noticed that too. That for the most part, and not everybody, but we are taught a certain way. And when you think about growing up in the African American household, a lot of times it was watching a behavior, and then we started walking in the behavior.
Right.
Most of the behavior that we walk in now is behavior that we watched. Most of it.
Exactly.
And so we watched financial we watch financial abuse kind of a sense, and so we start walking that, and then a lot of times we watch not valuing credit, growing up. And so when we grew up, we didn't value our credit because we ran up the credit cards because we thought this is a normal way, it's cool.
Right, exactly.
Maybe we weren't taught at 3 or 4 years old or 5 years old that, hey, let's put you some money up and save it. Let's teach you how to do this. What is it with our culture, man, that gets us to that point? I mean, I really want to free us tonight.
Yeah, absolutely. It's a wonderful discussion, and that's being had, all over America, all over the world. This is what I've seen. So I know my title says financial professional, but I actually am a financial advisor for a wealth management firm. We have an international footprint, and I work at a local office in Birmingham. And what I have seen is that we look at if we're comparing the two, to make it black and white in this situation, no pun intended. But if we're comparing the two, African Americans have a strong, and like I said, it has a lot to do with our upbringing. We see struggle, so it's easier for us to then purport the same things that we have seen, essentially recreate the images that we grew up seeing. So for a lot of us, it's easy to fall down a rabbit hole of not being able to manage credit, not being able to set up a budget correctly and stick to those types of things. Because simply put, we're not taught that when we are younger. In a lot of cases, this is not a blanket statement, but in most cases, from what I've seen, I'm talking about me personally with my own practice, we're not taught that. So I can give you a really good example. Myself, I can use myself. So you're your own worst critic in most cases. Coming out of college, coming out of high school, going into college, got there, learned about what a credit card was for the first time. Learned about what an auto loan was for the first time. And once I got to college, I got to, I got $1,000 credit card because that's what they were giving college students, that I got a car that I financed for $4,000 or $5,000. Not realizing that if I don't pay my credit card for 1 or 2 months, then, that's one of the worst things you can do that affects your credit score long term. So when I went to go buy a house some 7-8 years later, they pulled my credit and they said, "Hey, do you remember this credit card you got when you were, 20 years old, 19 years old?" And I was like, "Yeah, that's still on there." Like, "Yeah, you got to pay that off, or you got to figure out a way to settle that so you don't run into, so we can do this house for you. They're not going to approve your loan because you have this negative trade line, is what it's called, out there on your credit report." And, it's just, those are just basic skills that our schools don't teach. And in most cases, African-American parents are not equipped because we learn lessons much later in life that, for a lot of our counterparts is taught much earlier.
Wow, man. Hey, I wanna just mention this, Uriah, because it is vital that we understand this. We didn't learn it. You know, most of us got credit cards. When I was in college, I had a $500 limit.
Mm-hmm.
And I'm gonna date myself. Capital One sent me a car for like $500 on the limit.
Mm-hmm.
Man, I went crazy. I took a girl out to dinner. I had a girl I took out to dinner about every day to Quincy's. Listen, listen, I went to Quincy's in Midfield. Now you're right. You may not be this old, but back then they didn't have a way to swipe it, so they would actually have this little paper.
Mm-hmm.
And they didn't even call the credit card people to see if you had the money. They just would swipe it because you had the card.
Yeah.
And they
gave you the 3-pronged receipt.
Yes,
yeah.
Yes. Gave you a 3-pronged receipt, and you was like, hey, and so that credit card ended up being like $1,500. Oh, you know, I didn't have a $500 limit. So I never could chase that card down because I'm paying interest, I'm paying my payment.
Right.
And they kept charging interest every month.
Yeah.
And it got to be ridiculous. So let's talk about this for a moment. You're right, for the people listening to us. I want to talk about budget for a moment.
Okay.
Because some people say I can't budget.
Right.
You know, they say and then let's just be honest. Most of us are not on a budget. You know, forget a budget. Most people ain't even balancing their checkbook. Forget budget. Exactly. They ain't even balancing. You know, they're just spending, and they're just spending in hopes of I don't have a crash. You know, like. You know, I want this, bam. I think I got this in that, bam. I think then all of a sudden, oh man, I'm overdrawn.
Yeah.
Let's talk about budget. What is the approach to budgeting, man? I mean, like for the average person out there who's making, you know, minimum money, they got a family, but they've never been on a budget. What do they do?
Gotcha. You talk so, you know, I could say they need to sit down. I set up an Excel spreadsheet. And I try to track everything dollar for dollar. And some people will get to that point eventually, and you know, hopefully everyone will get to that point eventually to where they are very, very granular in detail about where their money is going, so they can understand to either where they need to cut costs and save more, and you know, do those things. But a really easy thing that I learned during my banking career, I was reading this book. It's called Wealth Watchers. And the idea about the book is taking the same concept of Weight Watchers and applying it to your money, your everyday spending.
Wow.
So if you understand the idea around Weight Watchers, the idea is that you have so many points per day that you can spend without overeating. And with Wealth Watchers, instead of points per day, you have money per day that you can spend without overspending. So just simple math. If you make $1,000 every week or $1,000 every 2 weeks, you take that $1,000, you divide it by the number of days till it's time for you to get paid again. You know, and you take what's left after you've paid bills. So you take what's left after you've paid bills, divided by the number of days till it's time for you to get paid again. And that way, you know how much money you can spend per day, whether it's 7 days, 14 days, 30 days. You know how much money you can literally spend per day without overspending. That's the first part people need to rein in, is the overspending. Because once you can rein in the overspending, then you can really get to like the overflow and saving. But if you, and this is not something, I want to also make this clear. This is not something that only African Americans have to deal with. This is not something that people who only make $1,000 or $300 or $400 a week have to deal with. There are people who make $1 million a year and spend $2 million. So wow. This is not something that, but it is something that is, you know, it's so simple that you can do, that you can use just to stop overspending, and it'll help you. It'll make you more cognizant around your spending, and make it easier for you to track what's coming in and what's going out.
I like the concept. You're right. Your Wealth Watchers. Mm-hmm. So after you pay your bills, you take that you have left and you divide it by the amount of you get paid, and that's how much you can spend a day.
That's how much money you can spend per day. So really easy.
Wow.
So we all learned addition, subtraction, division, and multiplication when we were in school, or we should have. So if you use that division brain and just divide it, we can do it. I'll do it on our phones now. So divide. You know, if you got $500 left over and you get paid. You don't get paid again for 2 weeks. You got to take that $500 divided by the number of days. That might mean you can't go out to the bar. In the pandemic, you really shouldn't be doing that anyway. But it might mean you can't go out to the bar every night. You can't go out to the restaurant and eat out.
So I'm going to do this for those. I'm going to use that $500 number, Uriah, and I'm going to say a person got $500 and they got 14 days before they get paid again,
Hmm.
and so they basically can spend about $35 a day.
Essentially,
Wow.
they can spend about 35 bucks a day. That's what it comes down to.
And
So
that's, to be honest with you, right, that's quite a bit a day.
that is, especially now, as you know,
Yeah.
if you if you're at home for the most part, if kids are working at school, you don't have the after school costs because most of the time you're working from home, maybe virtually or something like that. Or even if you're not, um, you know, most people don't need more than about gas is pretty low right now. Most people don't need more than about $25 a week in gas. Most people, if you can, like I said, eating out and from what I have seen,
Yes.
eating out kills a lot of people.
Yes.
You know, you could easily spend $20 a day eating out.
It's so true.
Lunch and dinner.
Hey,
So,
black people, let me tell you about what we would go to the grocery store, go put the groceries up, and then go out to eat.
exactly. Yeah, go to the grocery store on Sunday, then go to Popeyes.
What am I thinking?
That.
Right. So this what, but you know what? Many times I've been here. You right. I'm not conscious. Many people are not conscious of the money they spend because of the debit card. Right. See,
right.
People won't spend that cash, but the card was a trick for all of us.
It is.
I kind of hate the debit card. I do, because if I had $100 cash in my pocket, I can carry it for 3 weeks.
And
my debit card
is. Go ahead. I'm sorry.
My debit card, I'm just swiping because it's a mental thing. We're not aware that it's coming out of our account because we ain't spending cash, and so we use it loosely like that.
Right. Yeah, Dave Ramsey, of which I agree with some of the things he says. I don't agree with everything he says, but
me neither.
Dave Ramsey, he has a pretty good goal there, where you know people. He prefers you to use cash. You know, he has this envelope system, or at least at one point when I was following his classes, he had an envelope system where you could, you know, take how much money was made for each item, whether it be entertainment or, you know, monthly bills, monthly expenses, things like that, and make it as granular as possible. And you put the cash into those envelopes and only use the cash in those envelopes for those items.
Wow.
And when the cash is gone, that means
I'm going to try, Uriah. I'm going to try, right? I'm going to try to put my debit card up. Oh, let's see. I'm going to try to leave it at home.
Okay.
And see how I do. I'm going to have some cash in my pocket now, just for gas or emergency. I'm just going to give me like $100.
Okay.
And I'm going to carry the $100. See how far it takes me all week without my debit card. I don't know if I could. I probably could do it. You know, because I spend loosely, man. I do. I spend too loosely. When I want something to eat, like I go to Tzatziki's. You know, Tzatziki's is my spot.
Yeah.
You know, but Tzatziki's can kill you. I mean, like, you know, I mean, you know, I get the salmon fees, right? It's $15.
Exactly.
Period. You know.
I know. It was Tzatziki's right across the street from my office.
Oh yeah. So I literally could do this every day. You know, Tzatziki's, because I love the salmon and I'm trying to eat better. So I'm thinking it's healthy. Healthy is expensive, but man, some kind of way you got to find a way to do this stuff at home. And what on the average, what do you think we're spending out a week, the average person?
Well, of course, people who make more spend more, but a week, probably at least $200, $200 to $300 a week, and food costs eating out.
Wow.
And remember how you said that you went to the grocery store also? That's not including that money that you actually spent on groceries. So, but just eating it out alone, it adds up very quickly. Over a 7-day time frame, $20 a day, that's $140. So
man,
so it adds up very quickly. At least $200. If you're talking individually, if you're talking to family, it's probably more.
And that's a con note.
Mm-hmm.
Like, don't even mention if you're going to Saltgrass or something like that. I mean, you know, me and my buddies, man, I'm telling you, me and my buddies, you know, Bobby Palmore, I'm gonna call him out. He probably looking at me now. Bobby Palmore, that man, let's go out to eat. So we ticket $70, $65. You know, next day ticket $40. So I'm thinking to myself, man, I'm gonna kill Bobby.
Yeah.
And then my wife got to eat. I got to take her. I can't eat by myself, you know. So then That's more money. But I want to talk to you about our culture again. You know, we talked about budgeting.
Mm-hmm.
Let's talk about retirement for a moment.
Okay.
Um, oh gosh, most people are not prepared.
Yeah,
Period.
this is true.
They're working. They'll be working. Everybody's working older and not working because they want to for recreation. Some are working because they don't have anything.
Exactly.
So they got to go to a place like Walmart and be a greet or something like that because they didn't save up no money.
Yeah.
Um, let me see. Let's take a 40-year-old.
Okay.
Okay, 40, 50. Because what can a person at this age range do? 40, 50, 60, even 60. What can these persons do to say, well, I want to start my retirement? Do you have any tips for those people that want to start now? Or some people may say it's too late. Either too late, and how can they start now on getting themselves together for retirement?
So I don't ever think it's too late. You know, some people can't sit still, so they'll probably continue to work anyway. But I'll start with the 40-year-old since that's the age range you gave me first. That person right now, hopefully they work for a company that has a 401k plan, because many companies don't have pension plans anymore. You can't really rely on that. But if they have a 401k plan with their company and they put away, let's just say that company matches 3% or 5% of their money. I'll say 5%. That company matches 5% of their money. They put away 5%. They're now saving 10% of their money.
Very good.
10% a year. So they saving 5% that's coming directly out of their check. That money is coming out pre-tax. What that means is that that's coming out on the gross number. That's not coming out on the money that you take home. So it don't hurt you as much to do that. So what will happen is, if you do that, the sweet spot, in my opinion, is to save. It doesn't matter, especially if you're around 40. It's a little harder at 50 because you got to catch some catching up to do. But at 40, if you can save for 25 years, because most people, roughly the retirement age is about 65, what the United States considers as a retiree. If you can save for 25%, 25% of 10% a year for 25 years, you should retire with at least $1 million.
Wow. Now repeat that one more time.
So if you're 40 years old and you can put away, save, and invest that money for 10 years. When I say invest, I mean take that money and invest it into the stock market for 25 years. 10% of your income for 25 years, you should retire with at least $1 million.
Wow. So, okay. So, what would be some stocks that you would recommend for people who need stocks for dummies?
Gotcha. Well, I can't give. I'm legally bound, so I can't.
Oh, that's right. You can't. You're right.
But I'll tell you this way. Invest in what you understand. So if you shop at Walmart, if you shop at Target, if you shop at Lowe's, if you shop, let's say you like high-end stuff, so you buy Louis Vuitton bags, you got to buy gas in your car. Most of those companies are publicly traded, which means you can buy their stocks. And a lot of companies now actually let you buy what's called fractional shares. What that means is that you don't necessarily have to spend $200 on Apple or $100, $130 on Apple right now. You could buy a fractional share if you started trading with some other companies. This is not usually offered in 401ks, but you can, if you're doing it yourself, you can buy fractional shares on, just about any company, where you could start with it as little as $5 a day or $5 and start buying stocks. So
tell me about, now I know the 401k, but help us with the self-employed. Okay. That sector of people normally don't have the benefit of a 401k as far as the job.
Right. And they actually have better options.
Okay. So help us out there.
Okay. So for every business owner that I work with, I recommend something. I recommend something called a SEP IRA. S is in Sam, E is in Edward, P is in Paul. SEP IRA. With a SEP IRA, let's say you have a company and your company grosses $100,000 in revenue.
Okay.
Of that revenue, you take home $60,000 of that. Yeah, after expenses. So your earned income is $60,000, right?
Mm-hmm.
You can put away 25% of your income into an IRA, into that SEP IRA. That's called, IRA stands for Individual Retirement Account. And SEP IRAs are only for businesses. And so these are sole proprietors for the most part that I'm talking about. And it's a huge tool. So to put that in perspective, I'll use 100,000 because that's a round number. If somebody had $100,000 that they made and they could put away 25% of that, that's $25,000 a year. Most Americans can't put away $25,000 a year into their 401ks unless they're 50 years old or older. The average American can only put away 19,700, something like that, 19,900. So for you to be able, if you made $100,000 in your business, because most of the time business owners have the cheat code with the taxes, with what they can do with the tax code. And the SEP IRA allows them as a sole proprietor to put away either 25% of their income, which in this case would be 25,000. But let's say you made more money. Let's say you made a lot more money and your earned income is much higher. You can go all the way up to $57,000 a year that you can save. And all of that money is then written off against your income.
Wow.
So let's say as a business owner, and I have some clients that I do this for, and you made $250,000, and after taxes and everything, you still are left with like 175 after you've paid everything off and wrote a lot of stuff off. You can now put away 25% of your income or $57,000, whichever number is less. In this case, the $57,000 would end up being, or the $25,000 would be less. But if it was much more, the $57,000 could end up being less.
Man, this is some powerful stuff. So the individual, the self-employed, really can come out better with the SEP.
Yeah. Mm-hmm.
Wow, man, this is very good. Now, just say, for instance, I'm going to ask you, I'm a pastor.
Right.
Okay. I pastor a church, and a lot of times, again, here's a group who may not know. Now, there's some pastors who really are in the know, and there's a lot, though, who don't know anything. Yeah. So while they may get paid, churches are different now. Many churches still pay just some pay cutting taxes, some just still pay a straight salary up to the pastor to be an independent contractor, however they do it.
Right.
So how does that group of people, just say churches or pastors, how do they take advantage of the IRAs and as far as the wealth building and the retirement? What are some good tips you can give that group?
Gotcha. Well, if you are a contractor, you're a sole proprietor, you're a business owner. So if you get a 1099, you're a business owner. So that's one segment of people. If you get a W-2, then you are an employee. That's another set of people. So the rules are completely different.
Gotcha.
So if we're talking more 1099s than W-2s, the 1099 crowd, they can take advantage of that SEP IRA, or they can just open up a single IRA. Let's say they don't have $25,000. They can't afford that yet. Well, there's still regular, what we call traditional IRAs and Roth IRAs out there. With traditional IRAs, you can put away a little over $6,000 now a year, which adds up quickly. The way you have to look at this, you got to look at this as a big picture. Like, I can't touch this money until I don't plan on touching this money until I'm 59 and a half years old. So even if it's just $6,000 a year, that still will add up quickly. Or add up over time, especially with it being invested. Roth IRAs are another, what I call, like I said, the word I used earlier, the cheat code. Roth IRAs actually don't give you a tax benefit to put the money in there, like a traditional IRA or a SEP IRA. But every penny that you pull out of a Roth IRA is tax-free. Wow. So let's say you only make, you never make over $50,000 or $60,000 a year your entire career or your life. Not you, but it just in anyone. You can open up a Roth IRA, do that all your life, and that may not be your main source of money. But what will happen is over time, that money will grow tax-free in whatever investment you have it in, and that money will also, once you're ready to pull it out, you have to be 59 and a half. But once you're ready to pull it out, all that money comes out tax-free too.
Right. What is the interest on a Roth IRA right now? You know, right now?
It depends.
Okay.
If you go to most banks, it's going to be the savings rates. Savings rates are terrible right now, but to give you an average of what the stock market does, it's been doing great the last few years. But on average, the stock market grows at about 8% a year, 7 to 8% a year. So, like I said, if you make $60,000 a year and you take 10% of your income and put it into a Roth IRA, that would be $6,000. That would be, and you like remember I said you do that for 25 years, you should have $1 million.
Mm-hmm.
Prime example. And then that $1 million is then when it's time for you to use it, you don't ever have to pay taxes on it.
Wow, really?
Yeah, federal or state.
Wow. Well, I want to talk about in our closing moments. Because I mean I could talk about this all night. You're right.
Yeah.
I want to talk about one of the greatest wealth building being avenues that we as a people, especially African Americans, do not take advantage of, and that's life insurance.
Yeah.
Gosh, man, when we life insurance almost is like the elephant in the room in the Black community. Like we don't want to talk about it. Many people don't want it. They almost think it's degrading to get it. You know, like feel bad because number one, I don't want to talk about life insurance. I ain't finna die because that's what they. That's what they think. And the truth is, we all got to get out of here one day, right? Yeah. But I noticed that the other side, we talk about the other side, other races, they capitalize on life insurance. Like they'll have $3 million on a loved one. Now I know it's also based upon your income and that kind of thing too, but they'll have $1 million on their loved one or $500,000, and people don't understand this is tax-free money.
Yeah, it is.
Right? That it's a wealth builder. Like you life insurance, you could become an instant millionaire overnight. Is that not right?
You could. You definitely could. Like it definitely depends on your budget when it comes to life insurance, and it depends on the type. It depends on what type of life insurance. Everybody's situation is going to be different.
Sure.
I always say there are a few different types, but the main two types are term and whole life.
Right.
Term life, for those who may not know, means it's a certain amount of time, whether it be 10, 20, or 30 years, sure, and you pay the premiums on that. And after that term, that money is, that is going away. I call term life insurance you hope you never have to use, because that means you died within that term. So
unless you have a term life that, and this is just an idea for those listening too, because you really spitting out a lot of knowledge. Unless you have a term life that is convertible, renewable and convertible, which is good for, just say for instance, I get $200,000 term life, all right, and I get 30 years, and I get to be 80. Okay, they tell me, okay, it's renewable, convertible at your age. I can lower that term life to $25,000 because all of my bills are paid that time. Children are out of college, that kind of thing. I can kind of lower it, can't I, and make it fit what I need right now. All I need now is burial money. The term cover a debt or something while I was there, but now it's over.
Right.
But whole life is what you're going to talk about. That's permanent.
That's permanent. Yeah, that's considered what we call permanent insurance. So whole life is just like it sounds. It's for your whole life. So I'm on the fence. I'll be honest with you about that, Pastor Jackson. I'm on the fence about whole life. Simply put, because whole life insurance has an investment piece to it. And I've ran the numbers in many cases, and most people can invest. It's not tax-free, but most people can take the premiums that they're paying on whole life insurance, invest that money, and over, let's say it goes 15 years, and you pass away. Well, the stock market doubles about every 7 years. So if you took $200 or $300 a month and did that, you would probably break even. Just to be honest. But it goes for, let's say you don't pass away and you go 30 years that you paid that premium on whole life insurance, even if it is convertible, $200 or $300 a month for 30 years, that's like $2 million in my business. Wow. So, in my opinion, in some cases, it just makes sense to take that money and do something else with it, buy the term policy. And like you said, that's a really great point you made with the convertible feature. Have the term policy for your family, for any type of expenses that need to be taken care of, any burial expenses, stuff like that. Have that in place for that because it's much cheaper, and take the difference, whatever you're going to spend on whole life insurance. And this is my perspective. some advisors might talk differently, and I depending on the situation, like I said, it varies from person to person, from situation to situation. But in every situation, or most situations that I've come across so far, it has been a better opportunity to take the money and invest it versus to take it and buy whole life insurance or a type of whole life insurance.
Yeah, one thing they sold us on, you right, and I don't like it, especially us as a people, they
Mm.
sold us on you can borrow off the policy, and people fell in love with that foolishness about you can borrow off your whole life policy, which what you can, how long it take you to borrow that money. I mean, man, the rate that money is growing, you can't borrow much. On top of that, what you do borrow, you got to pay it back.
Yeah.
If you don't pay that money back, they're gonna take it out. If you die, they're gonna take it out of that face amount, basically.
Yeah. So
What-
I'll give you an alternative. Something I use for a lot of my clients, especially my older clients, it's called a variable universal life insurance policy. Here's what I like about it. It's technically a whole life policy, so it grows like a whole life policy. It's about the same amount in most cases. These are people who are usually around their 50s that I'm talking to this about. And what it then does is now life insurance policies have the ability to put certain riders on them. And a rider is just a clause saying that this policy also does something else. So the riders in this case that I'm looking at are in most cases what we call chronic care or long-term care. So let's say, for instance, you get in a car accident, you become incapacitated, or someone gets in a car accident, they come in and they become incapacitated. They could take that life insurance policy that they were paying for life insurance, and they could convert it and use that rider on it, that chronic care rider, or that they can take that money and withdraw from that policy at whatever the face value is. It might be 100, 150, $200,000, and they can use that to pay for a nurse to come to the house. They can use that to pay for, maybe having to be put into a nursing home for a short period of time. So I like options, and I feel like I'm always going to make sure I get the best bang for my buck. So I like variable universal life policies more than I like straight whole life policies, because they serve they actually have a benefit to them other than just being able to loan against them if someone needs to.
you have really just empowered us tonight with so much knowledge. Now, I want to ask you my final question for you. Just an average person come to you, those who are listening to us may never taken a financial course, don't know much about building wealth, but they want to start somewhere. They said, Pastor Jackson, I just want to start. I don't know where to go, but lead me in the right direction. Just if a person came to you or an agency relative to yours, um, just said they said I got $200 a month that I can save right now.
Right.
How could you direct them? They say, well, I got 250 a month I can spare. What would that yield them over the course of time?
It just depends on there's a few. It depends on what it's invested in. The average, like I said, for the stock market is about 7 or 8%. But here, my process when I sit down with anyone is I'm going to first. You got $200 a month. That's great, but I need to know, what are we trying to accomplish? Are we saving this money for retirement? Are you saving this for college fund? Are you saving this because you got to take care of a family member, which is something African Americans have to do a lot more than most people, family members that get older? What is this money going to be used for? We need to figure that part out first. And then from there, I can give them direction on how we need to approach the next step. So yield is going to fluctuate depending on the situation. Like I said, stock market is going to be on average 7 or 8% a year. In a great year, you might be looking at 10 to 15%. In a down year, you might be looking at 1 to 5%. On average, though, it's going to give you anywhere from 8 to 9%, 7 to 9% a year. But I do that all the time. To be frank, Pastor Jackson, one of my youngest clients is 27 right now. And you know how you see the 30 for 30s on maybe ESPN and stuff like that. And, they talk about the athletes that lose everything. They make all this money and stuff like that. Nobody thinks about the first generation doctor or first generation lawyer, first generation college graduate that is more educated than anybody in their immediate family, is now making more money than maybe even their parents. coming out of college and stuff like that. And now they don't even know who to turn to. And that's the exact same situation. You're now being handed a bunch of benefits and a bunch of money, and you don't know what to do with it. And those early years are very crucial because time, it's the old adage, time is money. And it's really important in this time. So if you come out of college at 21, 22, this client I'm talking about in particular was making about $120,000 as an attorney coming out of college. And no one in her family had ever made that type of money.
Yeah.
So we sat down and we put a plan together, and I helped her. She started with about $1,000 a month. And she, we've been together maybe 4 years now. We've been working together about 4 years now. She's worth well over $60,000 in 4 years.
Wow.
So, there's some people that don't have that much and they're 60 years old. But
so true.
Yeah. So consistency and discipline is huge when it comes to your money. That's why I use the Wealth Watchers book, because our money and the way we approach food and all of that is very similar. If you don't take care of yourself, if you don't do some diet and exercise, we'll all be on 600-pound life, so, which no one wants. But to your question, if someone came with me, my first goal is going to be to sit down and try to understand their situation, because I can't help them if they don't know what they want to accomplish. So we need to sit down, we need to figure out what they actually want to accomplish. And then from there, have, consistent contact and make sure that we are still on the right track every 3, 6, 12 months.
Great, man. Are you available for new clients?
Absolutely. Yeah. Okay.
How can they reach you if they want to start their financial freedom or financial advising with you?
Just give me a call. They can reach me at 205-969-7046. That's my office number. Again, that's 205-969-7046.
Y'all got it? Yeah. 205-969-7046.
Mm-hmm. Or they can email me. It's my first name, Uriah.Williams@morganstanley.com.
Uriah.Williams@morganstanley.com.
Yep.
Don't be going to see Uriah with no junk. Now Uriah businessman, he work at Morgan Stanley. He ain't talking about your Uncle Stanley either. But yeah.
Well, Pastor Jackson, I'll be, like I said, I'm a frank person. I'm from the Midwest originally, so we talk pretty straight. So one of the main reasons I do what I do is because a really close family member of mine was laid off from her job, and she did, all the stuff I'm talking about right now. She did everything right, and what happened was she was invested in a type of investment that was only yielding her a very small percentage. And it was simply because the person that was supposed to be helping her didn't actually take the time to try to understand her and take the time to actually educate her on, risk reward, essentially. So she was in her 30s. And if you, just to give you an idea, if you're in your 30s, you're probably going to be working for 30 or 35 more years. So it doesn't really matter what happens in the short term. But all she did was tell him, hey, I don't want to lose any money. And that's kind of what we're taught when it comes to the stock market, because we don't understand. I don't want to lose any money. So he put her money in a type of investment that didn't earn anything. So she got laid off at 61 years old. And she only had about $120,000 to her name. Now, that might sound, to some people, that might seem like a lot. But if you have to live on $120,000 for the rest of your life, that's not a lot of money at all. Right. So see, if someone would have just taken the time to understand and help her understand, she would have easily, I did the math, about $700,000 when it came time to retire. And I'm really passionate about that. I'm really passionate about working with my people, African Americans, and making sure we try to close this wealth gap. I read an article today that said there are 50 Americans own more wealth in America than 165 million other Americans, poor Americans. And when you think about, that's more than a third of the country.
Wow.
So African Americans have less than 1% of the total wealth in America. It's either 1% or 10%. Either way, is very, very low. And there's a lot of different causes for that. But I've made it my mission to try to help as any way I can to get us out of this rut.
I love it, man. I love it. And my kudos to you, Uriah. This has been an awesome interview. It's an awesome interview. Listen, family, get your financial business in order, please. Especially during this time of pandemic. You never know when the next one's coming. We don't know which way the country is going. You got to have some money saved up. And man, I'm preaching to the choir, preaching to myself. Got to have some money saved up. You need to call Uriah Williams. I'm telling you, get yourself, don't think you don't have enough money either. Get yourself together right now. Call Uriah and say, please help me get on the right track. This is what I have. This is what I can spare a month. I'm going to grow from there. And eventually you'll be worth 60,000, 120,000, $1 million. And hey, you ain't got to be a movie star to do it. You don't have to be from a family of millionaires to do it. You can be the average person with $1 million in your retirement by doing it right. And I don't care if you're 35, 20, 40, 60, 65, you still got time to save up money for your retirement. Uriah, I'm calling you myself because there's some things I want to get straight and some things I want to do with my church as far as retirement. I want to really get with you on to make sure that my family is secure as well.
Absolutely.
I appreciate your time, man. Thank you so much. Y'all, this has been Uriah Williams. Mind your business. Yes, sir. You had something else?
No, I was just saying thank you for having me.
Man, thank you for being here. You're going to hear from me. Trust me. I can't wait to call you this week, but I want to talk to you about some things. I got to get this stuff together. Hey, listen, family. We've had Uriah Williams on the show tonight. Mind your business every Thursday night. Contact him. 969-7046. I think. So it's running across the screen anyway. 205-969. I want to say 7046. I got a good memory. So mind your business. His name is Uriah Williams, and he's a great, great financial advisor, very passionate. I feel his passion. He wants you to do better. He wants to give you avenues and doors to get your finances in order. So don't worry about your mistakes of your past either. You can't continue to beat yourself up about what you have not saved so far. But the answer is, what are you going to do with the rest of your life and the money that you have now? So listen, if you got to start over, but let's do it right. Let's let this pandemic produce fruitfulness in your life. I need y'all to get on that phone and call them tomorrow or whenever and make an appointment and go in, take what you got and get your finances in some kind of order, get on a budget and take care of your money. All right. If you take care of your money's going to take care of you. I guarantee you. I appreciate you all. Listen, this is Mind Your Business. Next week, we're back on every Thursday at 8 o'clock. And I love what I do because I highlight the successes and achievements in the African-American community. Listen, as I always do when we get ready to close, I got to give you some nugget so you can carry on with this week and your life. You are victorious. That's our nugget. You're victorious. Man, let me tell you something. People may not call you victorious, and you may not even feel like you're victorious. But the victory is more than a feeling. It is. The victory is more than emotions. The victory is the conqueror that's inside of you, and you are a conqueror. You're going to conquer every area of your life. You're going to conquer every area. That past hurt, you're going to conquer that. That bad relationship, you're going to conquer that. Those financial mistakes you made, you're going to conquer that. That emotional strain that you've been under for years, you're going to conquer that. All right, because you are victorious, and victory is in you. I'm telling you, and you got to start walking like you got the victory. You got to start acting like you got the victory. You got to start living like you're victorious. A part of the problem is you talk so bad until you don't even believe you're victorious yourself. The first person to celebrate your victory, it ought to be you, not other people. Because if you wait on other people to celebrate you, I'm telling you, you're in the wrong world, wrong time. You got to learn how to celebrate yourself. The first person to celebrate this victory is yours. It's a new day, a new season in your life. And I'm looking forward to meeting the new you because you are a winner. I love you all. Have a blessed night. This is Mind Your Business. I'm Pastor Lawrence Jackson, Senior Pastor, Greater Grace Baptist Church in Center Point. Come worship with us anytime in the parking lot. We're not in the building right now, but we are on the grounds. We're in the parking lot every Sunday, 309 20th Avenue Northeast. Meet me at Greater Grace this Sunday. Share with us in the parking lot. I love to see you. God bless. Peace.